Assalamualaikum warahmatullahi wabarakatuh, and hello Dr. Razia.
Hi!
We are from the group 6 for the selected issues in accounting and financial reporting, and my name is IBRAZ bin SAZALI.
My name is SHAMILA. My name is Noraini binti Yusuf.
And me is FATHIHah. And my name is HAFIZAH.
And another one, our photographer, SITI NURZAHIDAH.
The one behind the scene. Alright, this is the overview for our presentation. As you can see, first we will present the selected listed company, which is Datasonic Group Berhad. And the second one will be MFRS 11 joint arrangement, which is we have to consider the policies and the standard, is it matched or not. And then number 3 is about MFRS 107, cash flows. And the last one is MFRS 121, the impact in foreign exchange rates. As you can see here, this is the annual report for Datasonic 2016. And a short report of the Datasonic Group Berhad. The Datasonic Group Berhad vision to enrich life through creative and innovative information and communication technology solutions. And the missions to customize and deliver integrated solutions and services to maximize investment return to customers. And this company is a listed company because it's stock exchange listed on main market of Bursa Malaysia Securities Berhad on 3 September 2012. Stock name or code Datasonic, whereby the stock sector is trading or services. You can see here, this is the product for the Datasonic. One of it is a chip for the license or for the passports or for the IC. Now we go to the second part, which is MFRS 11 joint arrangements. Under the Datasonic Group, we have joint arrangement. This is the corporate structure. As you can see, they have a lot of subsidiaries and joint venture. Under Datasonic, you can see the subsidiaries, which is 0.01%, 99.44%, and 100%. They have a 70%. This is the percentage of the holdings company. Alright, based on para 14 joint arrangements, as you can see, the classification of joint venture as a joint operation or a joint venture depends upon the rights and obligation of the parties to the arrangement. And para 16 states the joint arrangement whereby the parties that have joint control of the arrangement have rights to the net assets of the arrangement. Those parties are called joint ventures. Where we have a pair of 24 joint ventures shall recognize its interest in joint venture as an investment and shall account for that investment using the equity method in accordance with MFRS 128 investment in associates and joint ventures, unless that entity is exempted from applying the equity method as specified in that standard. This is example statements of financial position. As you can see here, the investment in an associate is based on note 7. Alright, this is the next subtopic for our presentation, which is MFRS 107 cash flows. As you can see here, can you zoom it? Alright, this is a statement of cash flows. The statement of cash flows shall report cash flows during the period classified by operating, investing, and financing activities, as you can see, 31st March 2016, and reporting cash flows from operating activities, 18, and an entity shall report cash flows from operating activities using either A, direct method, or B, the indirect method, whereby profit or loss is adjusted for the effects of transactions of non-cash in nature, any deferrals or accruals of past or future operating cash receipts or payments, and items of income or expense associated with investing or financing cash flows. Here we are. Datasonic Berhad report cash flows from operating activities using direct method. This is an example for using a direct method. Alright, here we are. Datasonic Berhad report cash flows from operating activities using direct method. This is an example. as you can see, there's a company and a group for Datasonic, and we have unrealized gain under this on foreign exchange. We have a write back on impairment losses on trade receivables and inventories. And next, we have income tax paid. Taxes on income, which is cash flows arising from taxes on income, shall be separately disclosed in direct method and shall be classified as cash flows from operating activities unless they can be specifically identified with financing and investing activities. Alright, next this is interest and dividends. Cash flows from interest and dividends received and paid shall each be disclosed separately. Each shall be classified in a consistent manner from period to period as either operating, investing, or financing activities. As you can see on the statement, we have two kinds of things, which are interest received and dividend received. Which is interest received is 1300 for the company, and they have no dividend received for the group. 1300 for the group and 1100 interest received from the company. And from dividend received, we have 30,000 and 27.5 for the company. And here we can see the dividend paid for the group and company. For the disclosure, an entity shall disclose in aggregate in respect of both obtaining and losing control of subsidiaries or other businesses during the period each of the following. First, which is A, the total consideration paid or received. B, the portion of the consideration consisting of cash and cash equivalents. C, the amount of cash and cash equivalents in the subsidiaries or other businesses over which control is obtained or lost, and the amount of assets and liabilities other than cash or cash equivalents in the subsidiaries or other businesses over which control is obtained or lost, summarized by each major category. This is this disclosure. Cash flows for or from investing activities, acquisition of subsidiaries, which is note from the note 39, and acquisition of subsidiaries continue from note 39, disclosed like on the statement here, where they have the equipment inventories and they disclose the net cash outflow for acquisition of subsidiaries, which has amount 69,030,000 for group in the 2015. And components of cash and cash equivalents, an entity shall disclose the components of cash and cash equivalents and shall present a reconciliation of the amount in statements of cash flows with the equivalent terms items reported in the statement of financial position. Yeah, I repeat, it's a statement of cash flows with the equivalent items reported in the statement of financial position, like on the statement here.
Okay, next for our last part of the presentation, for MFRS 121, the impact in forex rate for para 20A buys or sells good or service whose price is denominated in a foreign currency, and for para 20B borrows or lend funds when the amounts payable or receivable are denominated in a foreign currency, and for para 20C otherwise acquire or dispose of assets of incur or settle liability denominated in a foreign currency. And for para 28, exchange difference arising on the settlement of monetary items or and translating monetary items at rate different from those at which they were translated on initial recognition during the period or in previous financial statements should be recognized in profit or loss in the period in which they arise, except as described in paragraph 32. This is the example we take from Datasonic Berhad 4.3 functional and foreign currency. For para 9A, functional and presentation currency. For para 9B, transaction and balance. And for para 9C, foreign operations. It also follow para 10, foreign exchange translation reserve. And for para 28, the foreign currency translation difference. And lastly, it also follow para 39, unrealized gain on foreign exchange. And lastly, for para 44, the effect of foreign exchange translation. And this is the foreign currency risk for the Datasonic Berhad. The group is exposed to foreign currency risk on transaction and balance that are denominated in currencies other than the respective functional currencies of entities within the group. The group exposure to foreign currency risk, a currency other than the functional currency of the entities within the group, that based on the carrying amount of the financial instrument at the end of the financial year is summarized below. And this is the example for para 38, the foreign exchange rates from United States dollar, New Zealand dollar, euro and Swiss francs. And for foreign currency risk, the company does not have any transaction or balance denominated in foreign currency and hence is not exposed to foreign currency risk. And this is the foreign currency risk sensitivity analysis. It shows the effect on profit after taxation. And this is the para 20 on the disposal of a foreign operation. Example, a disposal of the group's entire interest in a foreign subsidiary or a partial disposal involving loss of control over a subsidiary that includes a foreign operation. In para 48, in relation to a partial disposal of a subsidiary.